Hi, everyone. This is Melissa Lewis, CEO of Elevate Business Group and Elevate Funding Group. I have with me today here Selina Davis. She is the top contributor for the group this week, so she gets to ask me anything. So, Selina, what's your first question?
Okay, well, everybody is always saying, make a budget, make a budget. So what's the budget actually for? And what's the expectation of a budget? And what's the point of the budget? What if you go over your budget? Like, you're not just going to say it's for your electric bill. You're not just going to go, and cut off your electric. So, yeah. What happens if you go over?
Okay, so on a personal level, a budget is created to know where you need to spend your money. It also gives you a really good idea if you don't have enough money coming in. And if you don't have enough money coming in, then you know you need to get another job, maybe a side hustle, maybe start a business, or cut back on things. And if you know where your money is going, you know what you can subtract from. Like, for instance, I was helping a couple that were trying to find money to save every month. I was trying to help them find a way to cut different parts of their budget. And we discovered that they were spending like $800 a month on fast food. And obviously, if they just ate at home more often, they would have plenty of money for saving for retirement. So that's the purpose of a personal budget. So that way, if you're a little bit short, you can, maybe cut back your cable package or cut back on how much money you're spending eating out, or maybe change your shampoo, or, whatever it is, where you can make cutbacks. I mean, some things are kind of hard to cut back on, like the electric bill. But does that make sense?
Yes.
And then if you go over, you're going to have to make some kind of payment arrangements with somebody while you try to find a way to make some more money in the next 30 days. Okay. On a business perspective, a budget also serves the same functions as knowing where your money is being spent, knowing how much money is left over, but it also helps you decide how much to charge for your services and your products. If you are coming in under, if you're not making enough revenue to cover your budget every month, then you need to cut expenses and increase revenue. The only way you're really going to know that is if you have a very clear budget that you go over the first of the month and you evaluate at the end of the month to make sure that you are within your expected spending for the month.
That makes a lot of sense. So, okay, say you do need to increase your revenue. What are some steps that a business could take to increase their revenue, make more money?
Well, number one, I would evaluate what you're charging for your products and services. Is it within the market's capacity for supporting that price? If you are in the lower third of what everybody in your market is charging, then you should, increase your rates. Generally, I would suggest you increase your rates 15% at a time. That way it gives your current customers a chance to acclimate their budgets to accommodate yours, and then have a 30% increase for any new clients that come in. Does that make sense? So that's
Yes.
The first way to increase revenue. The second way is to increase your revenue by adding income streams. And one thing that Elevate Business Group does is I help you create new income streams. That part of the question is so complicated and so unique to each business that I really can't specifically address it here. But nobody ever got rich only having one stream of income, and that includes businesses. You need to have more than one revenue stream in order to be successful for the long term.
So my next question is, how do you feel about operational reserve accounts? Is that something?
Operational reserve accounts are a really good tool for managing your money. It makes certain that all of the operating expenses are taken care of and handled, and that you're not going to have an unexpected expense derail your operating costs. I would add to that an operational savings account. I recommend that every business have at least 3 months worth of operational costs and savings. So that way, if there's another wave of COVID that comes around, they could not operate for 3 months and still be able to keep their business open. The only caveat that I would have to say is that if you're going for funding for your business and you have an operational account, you must make sure that there are no negative days, because the underwriters will ask for the operational accounts statements. Once they see that money is leaving the account to go into an operational account, and that's obvious by the amounts of withdrawals that are being made versus how many deposits are being made, they will want to see all accounts. So make sure if you're using an operational account that it never goes negative, because you will get declined for funding that you're trying to get.
Good to know. Good to know. Awesome. Okay. All right. So moving on to my last question. We're a small business. There's only 3 of us. And we have discussed working ourselves to be a sellable entity. And our owner would like to eventually be able to step back into a sole CEO position and just be the CEO, because right now he's in sales and estimating, he's part of the production line. So what point would he be able to do that? Would he be able to step back as the business owner and just be the business owner and not be a part of the production line? Does that make sense?
Yes. And I deal with this a lot with different companies. One thing that Elevate Business Group does is we help create exit strategies so that people can eventually retire. Things that we look at when we're creating a plan for that is, what is his retirement plan? How much money will he have to need to live on? Like, what does his income have to be? If he's planning to keep the business and just be in an overseer capacity and have someone else doing the day-to-day that he's currently doing, then we need to figure out how much money he needs to be bringing in to be able to pay himself and his second in command. And in order to do that, you have to create a revenue plan on how to increase your revenue to the point where he can do that and sustain that, and be able to know exactly how many years that's going to take. So that's a plan that we would have to sit down and figure out, or he'd have to sit down and figure that out with somebody.
Right.
But if he's starting to think about, what am I going to do? How am I going to start working less hours? That's definitely something he needs to start considering. And I would suggest business owners start thinking about that long before they get to the point where they're working too many hours for the lifestyle that they want.
Right. Okay.
So I hope that answers your questions. Did you have any others? Anything I need to clarify?
I don't think so. Is there a volume of sales that you would think, like maybe a specific kind of sales volume you think that would be a good amount for a person to be in that position to be able to step back?
Well, first he would need to figure out how much he's going to have to pay somebody in order to take over for him. And then he has to figure out, you add that cost to the amount that he needs to get paid for his, for his role in the company. And then he needs to figure out how to increase his revenue by that amount of money every year.
Okay, well, awesome. That's great. Those are some good answers, and I feel like they were some good questions.
Yes, those are very good questions. You definitely kept me on my toes.
Good.
And if you have any follow-up questions, feel free to call me. Your boss is free to call me. Anybody
Definitely.
watching this is free to call me. The number you can reach me at is 800-266-1473, extension 701.
Awesome.